But Euro USD is fun. Anything really. I mean, it should all kind of correlate as far as how we mark up the chart, right? It should be about the same.
Yes. Let's look at okay, we have a Euro USD, right? When you are doing a markup on your chart, you just start on a bigger time frame so that you just look for other institutional order flow. And once you get order flow, you get to have the directional bias of where the market is actually going and what's next. For example, if we look here, we get to see that the market actually failed to take out this high here. And you get to see that the market is dropping here. You get it? So based on order flow, we get to say this low here is gonna be violated. Yes, we are targeting this low to be violated based on order flow because price somehow it failed to collect liquidity at this level and now price is dropping. So the next thing price is gonna do is to collect every sell side liquidity that is resting here. So that's the idea that you are looking for. You're simply looking for order flow when you're looking at the bigger time frame.
Okay, so basically, if it fails to collect the liquidity up top or make a higher high, then it's gonna collect the liquidity at the bottom, make a lower low.
Yes, definitely. Let's just go back and look at something. If you let me just do it like this so that we get to see something. If you look at here, you get to see what price has been doing here. You see, it took out this, continued to go up. Okay, and look at this low here. It's intact. Okay, you look at this low here. It's intact. It's intact. Okay, price came, took it out. Okay, and then the moment we see something like this happen, now we say, wait, since price took this out, we might have price going down. So we wait to see what price is gonna do. You getting it? But only to find out that our price came up here. And when it came up here, what did it do? It actually took up this one. So it now validates that we are in an uptrend. The uptrend is continuing to go up. You getting?
Okay.
So simple stuff. If we get here, we get to see that, okay, since the market has been going up here, it has been taking out all these previous highs. But when we get to this level, we see price dropping and coming back and failing to actually collect this liquidity that is resting here. So we get to say, price is going down. So that means now price needs to come and collect what is down here. You get it? And since we see price now collecting what is here, we definitely know that price doesn't need to collect this high here. So any other block that we can find here, it's gonna be a trusted level. Based on the idea that price has already collected liquidity at this level. I just went over.
Yeah.
Okay. So basically, that's the idea where you need to understand that price is simply looking for liquidity in the market. So that means we say liquidity is resting on previous highs and previous lows. Remember?
Right.
We say it's resting on previous highs and previous lows. So if you get to see price failing to collect liquidity here, okay, at this level here, if it fails to collect liquidity here, it simply means the next exposed liquidity is gonna be this one on this low, okay? You getting?
Yeah, I understand.
And we see price collecting liquidity at this level here with this low here, this spike here collecting liquidity. So we get to say, since price collected liquidity here, we can trust this level as our order block because price is already being satisfied with liquidity. You're getting it? So price will push back. We can target something here and then price get to go down.
Okay.
So these are, by just understanding the order flow, you can just even use a simple thing, which is a Fibonacci. You can trade using a Fibonacci if you understand order flow and be profitable. Because if you can pull it like this, most of the time you can find that it's gonna be your smart money entry or it's gonna be your OTE. These are the two trusted levels where we can make an entry with the smart money and OTE. So you get to see what price does, come back and pull back and then go down.
Okay.
Same thing if you can put your fib here at this level here and get you to put your fib here. As long your fib lines up with your order flow, you're gonna find something. Price pull back.
Gotcha.
So now let's talk about what we have here. Just to clarify some of the things about order blocks. So when you are trading your order blocks, you need to be trading it in line with your order flow. So when you get to your chart, you look at order flow, okay? And try to
understand. When I get to my chart,
you look at order flow. First thing first, you need to understand the order flow so that you get to have an idea. You get to have an idea which highs and lows are exposed to be taken out. You getting? So that you avoid finding yourself in a direction whereby you indicate an order block and price just violates your order block like nothing was there. So we want to eliminate those chances and try to reduce those chances. So for an example, let's look at this level because I think it's something that I might have not mentioned there. Okay, if you look at, we say an order block is the last up candle prior to the down move, you remember? If we talk about a bearish order block, it's going to be the last up candle prior to the down move. If you look at this scenario, we have two candles. It's going to be this one and this one. You're getting? So between the two, an order block, it's going to be the candle, the last up candle that is going to form the highest high. You're getting? That is going to form the highest high, meaning this is not an order block, although it is the last candle prior to the down move. The reason it's not an order block is being disqualified is because this is the last up candle that has formed the higher high. You getting? So this is our order block. You getting?
Gotcha.
So we mark it like this. So we mark it like this. While many people will be waiting for price to actually get here, price is not going to get here because the order block is not this one, it's here. So price get to this level and you get to see price dropping. Simple stuff like that. And when price drop, you ask yourself, where is it going? If you look at here, look at this area here, you get to see that our price has been playing here at this area. It has actually formed some equal lows, you see, which is also confirmation that there is lots of liquidity that is being built up here. When you see this happening, some equal lows and stuff like that, or equal highs, it's simply building up liquidity that the smart money traders, they're gonna come and collect it. Because the retail traders, they put their stop loss here. So they know that there is a lot of money here. It's either in a form of buy stops or pending orders and stuff like that. So there is a lot of money resting here. So they're going to come and collect and take that money from those retail traders. Are we still okay?
Yeah, I'm following on.
Oh, okay. So that's the whole thing about this thing. Okay, let's shift. You asked me something, you said about the markups and everything. So I just wanted to clarify order flow. How do I look at price? When I get to my chart, I just look at order flow. Where are we going? starting from the bigger time frame and understand where we are going. So whatever that I will be finding within the smaller time frame, if I maybe let's take if you look at here, based on order flow, we're supposed to be taking out all these lows that are here. So if I'm going to a smaller time frame looking for trades, if I find a buy setup, it's not going to be something that I can actually want to hold on. It's going to be something that I can just want to make quick cash and I'm getting out of it. You're getting it.
Okay.
So why? Because it's not in line with order flow. But when it's in line with order flow, that's when we get to now talk about swing trading, where you can just swing trades. Because you know order flow says you must go down. So that's the idea.
Okay. So right now, from my understanding, it didn't collect the it didn't make a higher high and collect the liquidity right before it, the red box before it. So it's gonna collect the liquidity going down for a short. You can do a small short short in the market right there. You can do something real quick right there. Get in and get out.
Yes, you need you need to go in a smaller time frame and find maybe any reference point that will actually line up with order flow. For an example, maybe you find an order block lining up with the fair value that says, you know what, price might actually retrace on a smaller time frame and continue to go down. So we're gonna be going to a smaller time frame and look for something like that. You're getting it? So we get to see. For
It
example,
looked like there was a fair value gap right there.
Fair value.
I was looking at before.
Which time frame is that?
I think that was the last one we were just looking at, which would be the I think it was monthly. Did we do weekly? Was that weekly or monthly? The last time frame was on.
Okay, let's go there. You
the
see
most recent.
This one.
Yeah, it looked like is that a fair value gap right there?
You mean somewhere here, ne? In between here?
No, up a little bit more. Most recent price action right there, right in between those two up candles. It looked like there was fair value gap right there.
This one.
Yeah.
Yes. But let's just look at it and see what price actually did, ne? So we're just gonna go to a smaller time frame and try to investigate. Because when you notice something, it's always better to go back and look at it for your own learning purpose. So you need to understand what is really happening. So let me just mark up the charts. And you know, these things are so simple. People, they just complicate stuff. I don't know why.
Yeah, I feel like I'm making it a little more complicated than it should be. When the order flow seems like it's simple enough.
You are not clear. I can't hear you. Come again. You're saying something?
I feel like I'm making it more complicated than what it is. I feel like I'm making it a little more complicated than what it is when the order flow seemed like it was simple enough to trade off of. I'm not sure if you can hear me.
Oh, okay. Now I can hear you. Okay, you see what you were talking about. Okay. You see what you were talking about. You were talking about, you said there is a fair value gap there. Look what price did. You see what price did? Hit your fair value gap. What did it do? It went up.
Right.
And most of the time, what I've seen in cases like this, you find that the fair value gap, it's lining up with a violated previous high or previous low.
Okay.
So you see, it lines up with this violated high here. So price will just pull back, come back, fill in the fair value gap, and also respect this previous high that was being violated. And we get to see price pushing up before it gets to drop. So the moment we see price pushing up at this level here, remember, this thing is very simple. The moment I see price pushing up at this level, né, and when price pull up here, this is going to be the recent low, okay? We agree on that. So I can put a line like this. Put a line like this. Just put a line like this. I'm recording this session. Né? I think I can send it to you if you need it. And then here, this is our low. This is our high that we have, the highest high that we have. So you can put it like this. The moment you see price just pulling back, you put it like this. And then now what you are looking for, this is your recent low that has been formed. Price is going up. You are waiting. If price get to this level and take out this, you definitely know that our price is bullish. You're getting? So you definitely know that price is bullish. You are going up. But if price fail to get to this level and collect this liquidity here, it simply means we are still going down. You're getting?
Okay.
So what you're gonna be
that would be a failure to return?
Yes, it's gonna be a failure to return. And then price continue to go down. Guess what? Price broke this level. Price broke this level. That means we are still going down. So you definitely know that according to order flow, this thing has to go down. So whatever that you're gonna be looking for in a smaller time frame, if you see a buy setup, it's not gonna be something that you're gonna want to hold for so long because you know what's the ultimate move of price. Where is price going to? So you're not gonna waste time and just looking to hold maybe a setup for a month because it doesn't line up with order flow. So it's gonna give you some problem.
Okay.
So let's switch to daily and see if maybe we can find something that is clear here. This is Euro USD, right? Yeah, it's Euro USD.
Yeah.
Okay, let's just look at here what we have. Okay, here is what we have. Let me look here. We have an fair value gap here. We have an order block here. Let me show you the fair value gap so that it can be clear. You see the fair value gap here. This is the fair value gap. Let me just make this thing straight so that we get to see what we have. And another thing that I think I did not mention, it's normal for price to fill 50% of your fair value gap and go. It does that most of the time.
Yeah, I kind of been using my Fibonacci a lot more now.
Yes, it can fill 50% of your fair value gap and then quickly go down.
And the bases and a lot of stuff like that.
Yes, it uses those stuff. They work those stuff. So let's look at here what we have. So price is very simple. Man. You get to see that we have equal highs here. You see at this level, you have equal highs here. So the moment you get to see that we have equal highs here, that simply means price is gonna collect these liquidity pools that are resting here. So there is a lot of money here in the form of pending orders, buy stops and everything, and some stop loss. So they're gonna come and want to clean up these areas. So the way they're gonna do it is just to price to spike up all these equal area. Spike up those who were buying here, who were waiting to buy here with some buy stop, they will think price is going up. You see? And what happens? And price shift.
Right.
Those who were selling at this level, they're gonna say, "Amen, we are closing, price is going up," and then price change direction. So that's the whole idea that you need to have now to say, okay, since we get to see that there is liquidity pool resting here, what you need to be looking for is what is it that is here that price can actually use to drop after it has collected this thing here. You getting?
One more time, could you repeat that?
you definitely know that since we have equal highs here, there is a lot of liquidity pools that needs to be collected, okay? So you ask yourself, what is it that I have here that price can actually use as a point of reference to go down? You getting? So you look for something that you can use as a reference point here to go down, for price to go down, because definitely price needs to collect this and then go down. And then you hear people saying it's a fake out after that, but they never saw the fake out coming and they never took advantage of it. So it's useless. But
right, they always say it's a fake out.
Yes, they always say it's a fake out, but they never projected the fake out coming. And they will never take advantage of it. They can only talk about what happened in the market, not projecting what is going to happen. So that's the thing. So once you see this, you need to familiarize yourself with something like this. Price is going to take out everything. And if you see price going up to a certain level, for an example, let's say you see how price has been going here, moving up. It is moving in compression. You see, this is compression, compression. If price is going up, moving in a compression way, it simply means the next following thing is going to be a shoot in the market, because compression is being followed by a shoot. So when are you going to be looking for something that is going to trigger that shoot? You getting it?
It's going to trigger, okay.
Yes, which is going to be your trigger. So what can it be? It can be your order block, your fair value gap, and all those things, your mitigation block and your breakup block. Those things can be a trigger. You getting it? So when price is moving in a compression, it sort of like validates that whatever you have as your reference point, it's actually has high chances of working. Why? Because there is compression that is going to use it to actually drop with some momentum. Let me just pull back here a little bit. Let's go back a little bit and see something that we have here. See something that we have here. Look at how prices are approached here, going up. You see? Yes. You see how prices dropped here. But before that, you see, there was compression. You see?
Right.
So the moment now, let's take, I have my thing here. I'm waiting for my order block here. And the moment I see compression, I definitely know that when price gets here, we're going to have some shoot in the market.
Okay. So when you see compression like that, you know a major move is going to go down as far as like with those candles, those three big institutional candles right there.
Yes.
Going downward.
Yes, it definitely confirms to me that price is gonna go down, and whatever I have, it's actually the right thing. It has high chances of being successful. Why? Because price is approaching in a compression way. Simply means it's looking for something that it can use to actually go down. And then boom, price gets to it, and you get to see price going down and collecting all these studies here, all these studies here. So the moment we see compression is something that we like, it's our friend. We want to see it happen more often because we know we make money quick. Because price is just gonna have those explosive. So
let me ask you this. On the screen we were just looking at.
You mean I should go back to monthly, ne? Go back to monthly.
Yeah, let's go back.
Okay.
It's where you marked the compression going up and then the drop down. Okay, right there. Okay. So right there, you got the compression going up and then you have a major drop down, right? Now you have this real large candle going up. Would that be a mitigation candle right there? Would you be looking for it to come there? Or would you just automatically be looking for it to return to order block?
Okay. I get you. Okay, let me just indicate the level you are talking about. So you are talking about this level here. Am I?
No, the red that's the one before it. It's a large
This one.
up candle going up. Yeah, that's the area we're looking at. But right in the middle.
Okay.
The large candle going up.
With the large
it has
candle
a long wick. Yeah, it has a long wick.
Okay.
Going up.
You mean this one?
That one right there.
Oh, okay. So you are saying it's a mitigation.
Yeah, go up to the next candle, the very next candle.
The very next candle. This one.
Right there. Yeah. Is that a mitigation candle right there? Would you be looking for it to return to that, or to go up and then come back down and bounce off of that? Or we're looking straight for the order blocks. We're looking only for order blocks really right now. We're just looking at the order blocks.
Okay, yeah. Well, let me just address that. Okay, if you see what happened here, let's just pull and see if we have something maybe on week. But we want it to be clear.
Mm-hmm.
We want things to be clear. We want things to be clear. So we get to see our price came down and then price pulled back and then price went up and then price actually, boom, it went up and then price came down. Okay, so if you look at this level, you get to see what price did here. It went down a little bit before it broke it and then came, retested it, you see? Retest your level and then it push up. So, but then it's a mitigation, but we are not looking for something that is not clear. You understand?
Okay, gotcha.
Yeah. Most of the time when you are trading, you need to actually be, I don't know, maybe be arrogant in a way. If something doesn't give you a clear picture of what you want, just ignore it.
Okay.
Just ignore it. Don't avoid something that is not clear. That's what I do most of the time. So that's what we want. And you get to see that our price actually pull up, but I was not going to trade this thing. It's not really clear.
Mm-hmm.
So just avoid it.
So instead of that, we kind of looking forward to return back to the order block. And I see it returned up to the order block, and then we have a quick down movement.
Yes.
Okay. And then it collected the liquidity at the bottom.
Yes, collected some liquidity. And then continue to draw. That's it. It's simple stuff.
Mm-hmm.
So let's shift and look at something. I think it's too small now. Let me just pull back like this. So we explain what was happening here. So that's how you actually do your thing. You just need to know this thing as if you are doing weather forecast. Just need to know this thing. And it's just a matter of time. Invest some time and go back and back test everything. And you are good.
Okay.
So, but I hope everything that we discussed so far is clear.
Yeah, it's definitely a lot more clear than it was before.
It's more clear, ne?
Yes.
No, because you are having questions already. So when we get to answer them, it's like you are. So, I mean, there is a lot that is happening. We can look at the chart and see a lot of things. You see, even here, there was a fair value gap. You see, this one here and this one here. And price came back, feel it, go down.
Okay.
This is a clean fair value gap. And if we look at this fair value gap, let me just shift and go to another time frame. I think it can be more clear on what we are seeing. You see, when we look at like this, we also see a breaker at the same time. You see?
That's what I saw. I saw a breaker.
Yes.
Yeah, I saw a breaker.
So it's sort of like line up with everything, you know. So that's what we want. Confluence in the market is very important. And actually having the eye to see, like training your eyes to see, and that can only be achieved through back testing. Because when you back test, you have a lot of confidence and stuff like that. You gain confidence because you get to see the probability of it. Like, how does it work? For an example, when you are back testing, make sure that, let's take your own trading view. You rewind the market. If you are not having the premium plan, you can do daily only. I think daily upwards, you can do that. So you can go back and just replay the market and try to predict some things. And then you write down everything. You write down your win, you write down your losses, you write down how many trade you took and stuff like that. So that's how I was doing. I was doing like putting it in an Excel, stuff like that, and just put everything there, put the pairs and stuff like that. And then I get to see, oh, okay.
Yeah,
okay.
I'm marking mine now. I'm marking it now. So I'm kind of like on a 1 out of 4, like a 25%
yes,
chance of
yes.
winning as far as something like that now.
Yes, yes, yes. So that's how you actually get to improve. And when it comes to that, you get to see that, okay, I lost this trade. Where did I go wrong? And you will get to pick up some things that they are not really working for you. Like you don't even want to focus on this one because you know for you personally it's not working. When you just like to have this model combined with this and then it's done. So it's possible that one, but it can only be achieved when you understand, when you have been back testing and stuff like that. You get to discover yourself. No, that's nice, man. That's nice. Let's keep working. Let's keep working.
Okay.
Let me look at something. Okay, we were looking at this is GBP USD. You see GBP USD also, it's same thing. Let me see. Is it the same thing? Yeah, it didn't collect anything here. So same thing that we are expecting.
Okay, so it's a failure to return, so we know it's gonna collect the liquidity at the bottom.
Yes, so right now I'm just waiting for price to actually confirm what I'm thinking. If price get to pull and close here, I definitely know that now we are on. So let me just look at this. Yeah, price can actually use this high here that was being violated previously to pull back a little bit. But you can find something within the smaller time frame and look for something there. For example, today we bought this gold based on what we have here. So this is what I saw. There's another block here, you see. So that's why I send those analyses and I say the bulls have actually kicked in. So this is what we have.
So that bottom line mark, that would be your discount area. Oh wait, it's actually not the bottom line, it's the middle line. I'm looking at the long wick candle you just line.
Oh,
and then it like you had lined the wick candle and then you had lined the order block.
So you see, these are some tips that we collected today and went out.
Okay.
Simple stuff like that. So we just collect something, we get out. Why? Because we know this thing doesn't line up with order flow, this setup that we have. But price is not going to move in a straight line like shoop. No, it doesn't do that. It will need something to retrace. It will need something to retrace. So we can take advantage of that. It's not wrong. But order flow is saying we are going down and we need to take out everything here. Because last time I was targeting this. Do you see this here? It's a clean setup here. I was targeting this last time. But price failed to get to this level. And it's sort of like it has built a lot of liquidity pools here. So later price is gonna come and violate this thing. But before price get to come to that, it needs to deal with some few stuff. You see it here, like you look at here, you get to see that we have something here that it needs to deal with. And we also have an order block combined with the base, you see. So that's a combination right there that price needs to deal with. So if price is gonna retrace, it's gonna have some problem here. and then continue to go down. Might not even reach to this level, just continue to go down. But what we...
So you're expecting it to bounce off of that order block?
That order. I've already taken advantage
the order
of...
block and the base.
Yes, I've already taken advantage of this one. So what I will be waiting for, it's actually it's based on time, because right now I think it's almost 22. I think it's about 2 hours or 3 hours. Yeah, it's gonna be 23. Yeah, it's about 2 hours left for actually 24 hours to be completed. You getting it? So I am timing now. If this candle here, okay, let me just zoom in and now get to talk about time so that you understand time. So what I want to see happening here, when the market closes, when this daily candle closes in 2 hours or above, when it closes in 2 hours above, I want to see it closing, the body of the candle closing above my order block. You getting? So I want to see this thing closing above here, the body. I want to see it closing above. If it doesn't close above and it closes somewhere here, it's a problem for me. I don't trust it. But the moment it closes at this level, that now confirms that we are going up. Our order block has been respected. That's how I look at things sometimes.
That's your confirmation.
Yes, if I'm looking at a 4-hour order block and I look at the time and I see that 4 hours is going to be completed and this candle in 4 hours is going to be completed. So if price gets to, the body of the candle gets to close below my order block, I will just leave it and say, I don't want to trade this. Why? Because it's most likely to fail. I want the spikes like this, where the body closes above this one, and then it's okay. I can say, now we are going up. I can go up with it.
Okay. And
So
you always wait on candles to close?
That's actually price against time, but not really waiting on. Let me show you something. This is just if I want to hold, maybe having a nice trade going up and stuff like that, I can use that. Because remember, when price get to an order block, it can actually react. You're getting it? That's normal. It can react, and we can take advantage of the reaction before price even get to violate your order block. But let's look at this here. Talking about entries, we are talking about entries. Yeah, now I think our zero float come in. But that's when our zero float come in to address something. When price get to this order block, what we're gonna be looking for, it's not clear. Let me go to 1 minute and see if there is something that I want to show you. How do we actually get to make our entry? And it was there. I think it's gonna be too much for me to actually go back. Did I pass the, oh, it went back this thing. I just want to show you something because you have been asking about our zero float entries. How do we actually come about that one? I think it's this one. I think this is the level that we're supposed to be looking at, okay? So now, what happens is when price get to our order block, this was our level of our order block, right? So I'm looking at 1 minute now, okay? So the moment price gets to our order block, I want to have a trade. You're getting it, but I'm not sure. You're getting it. So I'm looking at daily. I'm looking at daily and I see prices here on my order block. It's already activated. I quickly switch to a smaller time frame. It could be 5 minutes, 1 minute. When I switch to that smaller time frame, I'm gonna be looking for an order block that is gonna be formed within that smaller time frame and be retested in that time frame. You getting? Yes, I'm gonna look for that. So you get to see that we have something here, and price did what? Price came at this level here, It never broke the level, it went up. You getting it? And when price went up, look what it did. It took out everything here. You getting it? And when it took out everything here, it pulled back. So I definitely know, since we have this low here, it was never being violated, and we get to see we get to see some high being violated, meaning we are in a bullish market. You get it? So I'm gonna apply the same concept, but in a smaller time frame within the order block of daily. So I can get to say, for an example, I took the trade somewhere here. So I get to say, okay, now I need to take the trade. I take the trade, price go up with me. You getting?
Okay.
So always when you are in a bigger time frame, because you can't really afford to hold the bigger time frame and put your stop loss. Sometimes it can be a gap. It can be something like so huge, your stop loss is gonna be wider. So just wait for price to get there, and you do this. If you find something that price is gonna use as a point of reference to come and retest that level, it's okay, you enter. Because people need to understand that our price is fractal. Whatever that is happening in a smaller time frame, it's also gonna happen in a bigger time frame. You getting? So if you look at here, let's just look at here. The way this thing is being structured here is the same structure we saw on a smaller time frame. That's what I did. Nothing so complicated. Look at this. Look at this. Wait. Let me just put the line like this so that it's gonna be clear. Look at this, and then you look at what? You look at price coming back and testing. So that's the same thing that we're actually looking on 1 minute. Price going up and coming back and test something. You getting? So definitely price went back and come back and test it. So we go back to a smaller time frame and actually look for the same scenario to form within that time frame and take advantage of it. So that's when you get to have zero float entries, because when you switch to another time frame, maybe you're looking at 5 minutes, 15 minutes, you see a zero float entry, of which is a zero float entry. I hope it's clear.
I understand a little more than I did earlier.
No, that's nice. That's nice. So that's it. Nothing complicated. You just need to work on it. Work on the skill, improve yourself, just sharpen yourself.
Okay. Well, I'm definitely gonna be marking up the charts tonight and trying to see if I can improve.
Yeah, mark up some charts. Yeah, mark up some charts, and if you have time, you can push it to me on Telegram. When I have time, I will attend it to you and stuff like that, and we just continue. And if you need if you need a session, we'll just communicate on Telegram. Just feel free. Just communicate.
Okay, that's what I was gonna ask. When would you be available again for another Telegram? I mean, another Zoom call.
Yeah, you can ask any time for a Zoom call. It's not a problem. We are not restricted to do so, sir. Whenever you feel like we schedule, we have a Zoom. When I'm free, you are free. We have a Zoom, we discuss something. Sometimes maybe you just want us to just look at the market. It's still fine. We can just look at the market and discuss some trading ideas.
Okay. Well, can I go ahead and just schedule one for like Monday? You know, because I'm free all day Monday and Tuesday. So like anytime Monday and Tuesday would be great for me.
Okay, Monday and Tuesday. So that means we just gonna talk during the day. You just remind me during the day so that I can maybe know, okay, on Monday I'm gonna be available same time. Because I can actually say, yeah, I agree and forgot. So I don't want to forget. So just during the day you text me and then I will confirm the time with you to say, yeah, I'm free. And then we can go on.
Okay. Great. You said you're gonna be able to send this one to me? The recording?
Yeah, let me just check if I didn't mess up anything about this recording.
Okay.
Because because it might happen that I thought I was recording and stuff like that. You know, when the network does some funny stuff, sometimes it stops recording
Right.
the video. Okay.
Right, I understand. Okay. Well, yeah. So if it's a good one, go ahead and send it to me. If not, I understand. We can record the next one.
Okay, no problem. I'm just looking. Oh, it says pause recording and stop recording. That means it's recording. So I'm gonna send it to you. It's fine. It's here. It's recording.
Okay. Well, I appreciate the time you took out today. So I guess I'll just hit you up and let you know from Monday. See if we can do something Monday.
Yes, definitely. So it's not a problem. All the best, man. Keep on working.
You too. I sure will. Thank you.
Thank you, sir.